business with the highest failure rates, and how to avoid them. Introduction: Understanding business success rates. Starting a business is a daunting prospect for many, with 66% of entrepreneurs hesitant to take the plunge due to fear of failure. This report provides you with valuable insights into businesses with both high and low failure rates, helping you to make informed decisions as you embark on your entrepreneurial journey. By understanding the success and failure rates across different sectors, you can strategically choose businesses with the best chances of success. Footnote: The success or failure of a business is heavily influenced by market conditions, business structure, and operational strategies. 1. Gym businesses: high risk, low return. The gym industry presents a fascinating case of a business with high failure rates, with approximately 81% of gyms closing within the first year. Despite the allure of a low startup cost and the flexibility to begin with minimal resources, such as a small CrossFit gym, the fundamental issue lies in the lack of business acumen by many owners. Often started as a hobby, gym owners tend to neglect the critical components of business management, finance, marketing, and high-margin services. To succeed in the gym business, owners must focus on high-margin offerings such as subscription models and personalized training services. The model also requires targeting affluent clients, who are willing to pay more for premium services. Footnote: The success of a gym hinges on effective business management and the ability to attract higher income clientele willing to pay premium prices. 2. ATM businesses: low returns, high maintenance. Although the ATM business may seem like an easy money-making venture, it faces several critical challenges. Typically, ATMs generate minimal revenue, averaging only $2.40 to $15 per day, and the machine costs are high, often taking up to 7 years to recoup the investment. Furthermore, with fewer people carrying cash, the transaction volume is declining. While high-foot traffic locations, such as cannabis stores or bars, could increase profitability, the margins remain small. This business requires significant investment in multiple machines and constant logistical management. For most entrepreneurs, ATMs serve as a low-profit, high-maintenance business that is not worth the effort unless operating at a large scale. Footnote: The ATM business requires high initial investment and frequent maintenance, resulting in limited profitability unless scaled up to a significant level. 3. Dry cleaning businesses: toxicity and declining demand. The dry cleaning business has seen a sharp decline in demand due to shifts in fashion and remote working. Moreover, there is a significant environmental and financial risk associated with remediation. Many dry cleaners are sitting on contaminated properties that require expensive cleanup, with costs ranging from tens of thousands to hundreds of thousands of dollars. This environmental liability, combined with declining demand, makes dry cleaning businesses an unattractive investment. The industry is shrinking, and purchasing a dry cleaning business could expose you to significant hidden costs related to property contamination. Footnote: Environmental contamination is a significant hidden cost in the dry cleaning industry, with many businesses facing high remediation expenses. 4. Hotel businesses: real estate with high operational costs. Hotels are often mistakenly perceived as businesses rather than real estate ventures. The operational costs of running a hotel are exceedingly high, with profit margins often undercut by the need for 24/7 operations and staff. Hotels rely heavily on real estate depreciation for profitability, but the operational expenses often exceed revenues, making them a poor choice for independent ownership. Furthermore, franchising hotels, while offering a solution, comes with significant revenue-sharing costs, typically leaving only 2 to 7% of total revenue for the owner. With the consolidation of the industry and a decline in independent hotels, this sector presents numerous challenges for aspiring entrepreneurs. Footnote: The hotel industry requires significant capital and faces high operational costs, making it challenging for independent owners to generate sustainable profits. 5. Amazon FBA: high risk with limited control. Amazon FBA, Fulfillment by Amazon, has gained popularity, but it is fraught with risks. One of the major drawbacks is platform dependency. If Amazon alters its algorithm or allows competitors to imitate your products, your sales could plummet. Additionally, you are disconnected from your customers, unable to collect contact information or build direct relationships. The low success rate of Amazon FBA sellers further highlights the difficulties in making significant profits, with only 1% achieving an income of $100,000 or more annually. Sellers also face stiff competition from low-cost foreign knockoffs, making it challenging to maintain profitability. Footnote: Amazon FBA is highly competitive and offers limited control over customer relationships, which makes it difficult for sellers to sustain long-term success. 6. Retail stores, high failure rates and declining demand. Retail stores, particularly brick-and-mortar establishments, face declining foot traffic as consumers increasingly shop online. The business model is challenging due to the negative float associated with inventory costs. Retailers often pay upfront for products, but only receive payment after customers purchase. Additionally, retail stores face high rent costs, which further erode profitability. With nearly 90% of retail businesses failing within the first 4 years, starting a retail store is a high-risk venture. The industry's consolidation, coupled with the decline in physical shopping, means that independent retail businesses struggle to compete. Footnote: the retail sector faces significant risk due to high overhead costs, changing consumer behavior, and declining demand for physical stores. 7. Restaurant businesses, tough competition and high failure rates. The restaurant industry is notoriously difficult to succeed in, with approximately 60% of restaurants failing in their first year and 80% closing within the first 4 years. The high initial costs of building and operating a restaurant, including expenses for real estate, equipment, and ingredients, make it a financially risky venture. Additionally, restaurants face constant competition and struggles with customer retention. Unlike online businesses, restaurants cannot easily collect customer information for future marketing. Despite the high failure rate, there are opportunities for success with the right strategy, such as opening a fast food joint or creating a unique niche offering. Footnote: the restaurant industry has high failure rates due to competition, high operating costs, and difficulties in retaining customers. 8. Trucking and transportation, a growing sector with strong demand. Trucking and last-mile delivery businesses are experiencing significant growth, with an estimated success rate of 76.4%. This sector benefits from increasing demand due to e-commerce and consumer expectations for quick delivery. Last-mile delivery services, in particular, are a critical part of the supply chain, with 53% of shipping costs attributed to this segment. Although there are challenges, such as expensive trucks and the need for skilled drivers, the demand for delivery services presents a profitable opportunity for well-managed trucking businesses. Footnote: the trucking and last-mile delivery sectors offer significant growth potential, driven by the rise in e-commerce and consumer demand for fast delivery. 9. Senior care centers, high success rates and growing demand. Senior care centers have low failure rates, driven by government subsidies and the growing demand for elderly care. As the U.S. population ages, particularly with the influx of baby boomers, the need for senior care facilities continues to rise. These businesses benefit from steady demand, particularly for specialized care services, such as those for Alzheimer's and dementia patients. However, owning a senior care center can be emotionally challenging, especially when faced with the difficult decisions of evicting elderly residents due to financial constraints. Footnote: the senior care industry is experiencing steady growth, fueled by the aging population and increasing demand for specialized care services. 10. Real estate, a proven business model with high success rates. Real estate, particularly rental properties, offers a high success rate for entrepreneurs, with an 85.3% success rate. The demand for rental properties is strong, with 44 million Americans renting homes. Rental properties offer several tax advantages and provide consistent income streams. By leveraging financing, real estate investors can build wealth over time. This sector offers a proven model with high potential for profitability, provided the investor has the necessary capital and knowledge. Footnote: real estate remains one of the most reliable and profitable business models, offering high success rates and consistent returns.